Brandon, what up, sir?
What's going on, guys? How are you?
Doing well. How about you?
Doing well. Doing well. Excited to be here.
Nice. Yeah, pumped to have you. Yes, you're the co-founder of Layer3, which is a product providing omni-chain infrastructure for distribution, identity, and incentives. So you guys have facilitated, these numbers may be out of date, but 120 million transactions across 500 ecosystems by millions of users around the world. So very, very impressive numbers. I think you have, pushing on like 100,000 transactions a day through the platform. So I think most people probably know Layer3 as a Quest platform, but you guys have a pretty extensive product suite now. So wondering if you can just kind of give us the overview of Layer3 to kick this off.
Yeah. So we try and think about ourselves as an aggregator in its truest sense. So I don't know if you guys read Stratechery, but several years ago, this guy, Ben Thompson, kind of coined this term aggregation theory as a framework to understand the largest businesses on the internet. And I mean, the basic premise is that you have the supply side of a given network. So in our case, it's protocols that are using Layer3 to acquire users. You have the demand side. In our case, it's consumers that come to Layer3 to either touch our product suite or discover new products. And then you have a distribution channel, and that distribution channel typically is one that you either own or maybe you're leasing it, but it provides economies of scale. And so, the first, I'd say 3 years of our business, so we started the business in September of 2021, it was just building that distribution channel. So how do we get consumers to come to Layer3? And the best way to do that was basically provide discovery. So if you're a consumer, you're new to crypto, you want to learn how to provide liquidity to Uniswap, you can come to Layer3 and we would teach you how to do it. And after a while, we started to serve applications, then we started to serve ecosystems, and then we started to have a really strong footprint with consumers. And we said, well, how do we serve those consumers in new ways? So we introduced a trade interface on desktop. We introduced things like predictions and a feature that we have called races. We're now going to be tomorrow introducing a data product called Layer3 Signal. And all of it's kind of stemming from the basic premise that if you own a consumer and you're trying to offer that consumer multiple things, what can you offer them in addition to discovery? And that's the broader product suite. So the numbers that you mentioned were directionally accurate. We've done at this point, we've had about 3 million fee-paying users, so users who have transacted on the platform that have contributed to our top line growth. And then we also have a credential called, what we call it a cube. It's basically a credential to unified blockchain events. There's about 60 million of those that have been minted on the platform, and we serve 500 different customers, and those include base layers, L2s, and apps.
Got it. Awesome. So I think an easy and common critique of questing platforms is that they're kind of just full of low quality mercenary users, which I'm sure you hear every day. So what's your pushback to that?
So there's 3 types of consumers in crypto in my mind, and I'd be curious to get your take. So cohort number 1 are users who have a profit motive through capital. And there's like many substrates of this, but this is just like your speculative consumer. These are people who are trading on spot platforms, perps platforms. They're punching meme coins on Pump Fund. But like their basic premise is I have $1 and I'm going to speculate my way to more dollars. Then you have cohort number 2, which is profit through effort. And here I'd put like play to earn gaming. I'd put like what people classify as airdrop farming. Kaido is another example. And they are putting their capital at risk, but mostly what they're doing is they're exchanging their time. So they kind of view themselves more as gig workers than traders, if you will. And then your final cohort are people who I think are in like emerging markets, parts of Africa, LATAM, et cetera, that they don't care about like anything in crypto consumer. They just want access to like stables, and maybe they get like the T-bill yield through stables. And so anyways, I think that the market, particularly folks that you guys probably have as guests or people who are based like in the West on crypto Twitter, look at that cohort of effort as being a lower quality cohort. We take a slightly different view. I think that, they play a role in network growth. And the funny thing is that like behind the scenes, like every ecosystem looks to these guys as like a way to bootstrap their growth. What we've done is just build a business model around it. We are trying to expand our way into like the profit through capital. I think that's a higher LTV segment, though on a quantity basis, it's lower. But, from a retention point of view, these aren't users that are like bots. I think that's the misconception. That's where we take, I think, a line. They're real users with real wallet balances, but their wallet balances are somewhere between 1,000 to 10,000. They're principally in emerging markets, and they view themselves as a gig worker. They're contributing to the growth of an early network by spending time on that network. They're not whales that are going to be punting, massive amounts of TVL or trading sizes, but we want to work our way to reaching those audiences as well through kind of our product suite.
But there must be some people operating bot networks, no?
There are, but we have done a good job of filtering those out because of the credential that we have. So I'm not saying that they don't exist. I think that there are a lot of like bot networks or basically like industrial airdrop farmers. I think we've all seen these videos on Twitter. But it's very hard for our product to be applicable to them because you have to basically pay 25 cents anytime you do anything on our platform for these credentials. And so unless you're walking away in like a positive ROI sense, which in many cases the campaigns themselves don't allow, it's very hard for it to make sense for you to run like an industrial airdrop farm on layer 3. And that's also a sell that we have to our customer base, because our customer base sometimes says like, do you have the best price for your solution? And the answer is no. Like I'd say we actually price in like a more premium way, but we deliver better outcomes.
But if the reward is not ROI positive for the quester, why are they bothering to do it?
So there's two reasons. Reason number one is like they think it's positive EV from the perspective of getting ownership from that specific network. So let's take like Caldera as a for instance. These guys I think launched their token today. A user might come to layer 3 and discover Caldera through us. Maybe the rewards directly on layer 3 are not positive, but it's still positive EV because they're going to maybe earn ownership in that network downstream, right? And then the second is like, well, it might not be positive ROI at the moment of the reward, but I'm long the asset. I think over time, I might spend 25 cents to get 20 cents of OP, but over a 6-month period, the OP might be worth more. And then the final, which is a little bit harder for me to, I think, convince the market of, is that some people genuinely just want to like try new products and they're happy to pay a fee for it if we curate it. But I think that that's a lower segment.
What are some, you've probably seen, thousands of campaigns run on layer 3 at this point. Like what are some properties of successful ones, or what separates successful ones from unsuccessful ones?
The biggest question that we get because a lot of teams come to us, like we get about any given week, like 10 inbound requests through our inbound flow. A lot of these teams are extremely low quality. They don't have audited protocols. They've never raised venture funding. It's like a Twitter account and a guy. Maybe nowadays it's like even more of that because they just like vibe coded something that they think can scale their way to billion in TVL. And the reason I bring that up is if you think about Facebook, right? And let's say, I don't know, what are your personal interests? Do you guys run? Do you play sports? What's your
Yes, both.
Okay. All right. So let's take Nike, right? Like market leader in performance running shoes, or like Brooks or whatever, right? And then let's take me and let's say that I go and I try and like design a running shoe, and then I say I'm going to go and acquire users or customers through Facebook. Now I might spend a lot through Facebook's distribution channel and I might reach people, but those customers aren't really going to love my product. And so I can't blame Facebook for the fact that no one's buying those sneakers because I haven't built a good product. Right. And so we try to take a similar view, which is we have a strong distribution channel. If you're building what we would like classify as a tier 1 project, so you've built something that's useful, it's audited, you probably have a good investor base, the retention tends to be 60% or higher over a 3-month period from users that we bring you. So there's users that continue to come, 60% of them, and that's net new. However, if you are building something that doesn't serve a use case, we're a business. We're taking an unopinionated view. If you want to spend through our product, you're welcome to, but you can't necessarily blame us for the retention. So I think a lot of it is just, are you building something that's credible and serves a good use case? And if that is true, then we can help you get users that retain.
Got it. So I think blockchains, DeFi have kind of long understood the value of these questing platforms, but we've seen maybe less adoption on the application side. Like there are a few, like, Coop Records. Cooper's been running it really successfully for a while. And I'm kind of continue to be shocked how little people kind of follow suit. Maybe it's this assumption that it's, all shitty users and they're building a social product and it's going to kill their product or something. But I'm curious why you think we've seen less adoption on the application side, or maybe that's just not true.
I mean, social specific, I would agree that like if you're building like if you're building like Farcaster, you need to be very careful about like who you're bringing on and kind of the quality of content. So I think that does matter. I would say it's more due to the scale of budgets, right? So like we typically have a minimum on 6 figures as far as the contract sizes go.
Got it.
And so the foundations are like your large enterprise. We started by serving applications really well. Like if you guys remember, like Pool Together and Indexes, like back when we first started our business, those were like the dominant DeFi protocols of that period. And we served them. But then over time, what we realized was like, that's kind of like your SMB, if you will. Like we spend just as much time selling to them as we do like selling into a base, but the contract sizes are much larger because they have larger treasuries. And then the other thing that I would say is by virtue of them being larger, the purchaser tends to be more sophisticated. So they have a foundation team. Someone at that foundation team has discretion on like a budget that they can spend through layer 3 versus when you're chatting with an application, they might have a 20-person team. their foundation team is like an independent group. No one has discretion, and it's just kind of, you're spending the same amount of time for less output. So it's also sales on our side. We choose primarily to focus on the ecosystems because that's where venture funding has gone. If, your worldview, like the Seed Club worldview, is like apps are going to, capture more and more value. I hope that's true as well. And so if funding continues to like go to these teams, I'm optimistic that they become more sophisticated as well.
How do those more sophisticated customers think about their campaigns? You described some of the cohorts of people who are using Layer 3, but how does the buy side think about it?
Yeah, so it depends on what they're trying to achieve, because you have there are a lot of projects that are pre-tokens, and they're just trying to drive transaction activity, or they're trying to hit the KPIs that will get centralized exchanges excited about what they're building. And then you have post-token projects who say, I'm going to give you a unit of spend, and for that unit of spend, I want the highest quality user. So I don't care about volume. I just want maybe a user has a wallet balance over 10,000. I want to increase my TVL, but I want it to be very premium spend. So like Uniswap works with us every now and then on some of their larger product releases. They don't care about the quantity as much. So it depends what they're trying to achieve. And then once we understand what they're trying to achieve, we have a group of people whose entire responsibility is to help achieve that outcome. And these are people who are like chronically online, they're chronically on chain. And so they'll go to these ecosystems and they'll say, based on all of the data that we have and everything that we've done, here's how we can achieve the outcome that you want. So it's a little bit more bespoke or hands-on.
Got it. So I saw that you guys recently stepped into building agents, and I imagine it's a big part of your vision for the future of the platform. So yeah, wondering if you can share about how you're thinking about AI in the context of Layer 3, both maybe in the short term and longer term.
So in our business, you have a very large white glove service, which is what we serve to like the major ecosystems. And then we have something called the Layer 3 builder. And the Layer 3 builder is permissionless. It's like jumping into the Facebook ad builder or ads manager. And in that, there's a tool that we've built that's still, I'd say, an early R&D called Layer 3 Intel. And what Layer 3 Intel does is it plugs into the entire open web. So you have like all of the data that you could pull from Dune, all of the research reports that are public from like a Masari or Token Terminal or Blockworks, et cetera. And then it also plugs into the Layer 3 data set. And so you can, in natural language, say, I am the growth lead at Uniswap. I'm launching, Uniswap. I'm launching a new product for Uniswap, the Uniswap wallet. And I want to activate users that fit this demographic, design the best campaign for us. And then that agent goes and deploys basically your uni or whatever your spend is, taking this whole data set and helping you try to achieve that outcome. It's still, I'd say, in early days. Like we have a vision for a world where a team can just like say, just get a certain number of monthly active users every month, and you can just use Layer 3 Intel to do so. But we haven't necessarily seen the demand from the customer side yet. So we're kind of iterating it progressively for when the market's there.
Do you see agent?
Go for it with your follow. No, if you have follow up, go ahead.
Yeah, I'm just gonna ask if you see agents playing a role on the demand side as well in the future.
This is an interesting question, right? Because it depends on the mandate of the agent. And if the mandate of the agent is to profit, then a little bit to your question earlier, you need the ROI to be very explicit and very clear that like I'm spending a certain amount and I'm getting a certain amount out. But if it's a little bit more sophisticated, maybe it says, okay, well, this token will appreciate over the next 6 months, or perhaps it's meant to serve something else. Perhaps it's an agent that's deployed primarily to help drive transaction activity or test certain products. So it really depends on what the mandate is. But I think it's an interesting world. I think a lot of people believe the majority of blockchain transactions will be agents in the next 10 years.
With your larger campaigns, especially, you're able to drive a lot of traffic and engagement. I'm curious, what is the interface through which you get distribution to the people who ultimately complete the quests? Is it primarily through like first-party interfaces or something else?
Yeah, it's primarily through the Layer3.xyz desktop interface. We have some users who touch it on mobile as well. When Farcaster Frames came out, I think built decent distribution there. More recently, like less so. And then in the next few weeks, we're going to be announcing some stuff with Base around like the mini app integration in the new wallet. So there are, I'd say, third-party distribution channels that we use, but by and large, there are users that come to Layer 3 every day to touch our product suite.
And do you have intention to build something like, I'm surprised. I would think something like a Phantom or, some of these wallets that want to engage users might be another surface where you could do some kind of revenue share, something like this.
We have an API that some wallets have used over the years, Phantom being one, Robinhood as well. So we do serve some of these mobile products through like the underlying infrastructure. We also recently built Layer3 wallet, which it's currently a smart wallet, but we over time might build our own EOA. And all of that is built on the same underlying activation infrastructure.
I'm curious, just maybe as a final question, I don't know if you have something else, Josh, but I'm just curious overall, what is your perspective on the landscape of engagement incentivization writ large across crypto?
So if you think about like the progression of user acquisition, right? So first it was, we're going to form capital through ICOs. And then in theory, you kind of like build a community because people give you their capital. And then we had what happened with airdrops. And around this, I would say like Uniswap was probably the most notable airdrop in history. There were probably a few before it. Around that same time, you had liquidity mining. If you recall, last year, there was like this brief period of time around Blast with like points having a meta and everyone thinking that they were like this net new novel thing. And so anyways, I think that there have been a lot of experiments on like bootstrapping communities in crypto. Our worldview is that it's going to go the same way that traditional internet went, which is that you're going to have very efficient, very ruthless spending of capital to reach users. And it has to be in service of whatever your objective is. And that might be like you want to generate revenue. It might be that you want to acquire users. It might be that you want to drive transaction activity. Again, coming back to the point earlier, you might have different goals, but a tool that allows you to achieve that goal in a very tailored and bespoke way, no different than how like spending through a Google or Facebook work. And so our hope is that we, alongside like our partner suite and our broader product suite, can serve part of that market. But I think that has to be where this goes, because all of the things I mentioned, ICOs, liquidity mining, airdrops, are extremely inefficient uses of capital.
Beautiful. All right, Brandon, we'll let you go here. Appreciate you jumping on. Excited to see you pushing this world of incentivized acquisition. I feel like user acquisition is just a thing that we broadly suck at. So having products that make it easy is a great thing for crypto.
Appreciate it, guys. Take care.
All right, take care.